Hi everyone. This is the 2026 Mentorship Program, Lecture 18. And in this lecture, I will be doing a weekly top-down analysis. If you guys have noticed, I've been inactive on the YouTube channel and on the Telegram channel, which we now have a Telegram group. And I've been inactive around 2 weeks now. I had something to settle, so I was kind of off the chat. So I had to make sure I have everything done before resuming. So I had to settle up everything before coming back to the lectures. So we'll be continuing the lectures and I will be going through what price did when I was inactive. Talked about what was my bias prior to my break, because I took a 2 weeks break. So prior to the break, I talked about what price was doing, what I was anticipating, and how price have been trading since then. And I'll be telling you guys what I will be anticipating going in this week. On the daily time frame on the dollar index, before going to the 2 weeks break, I talked about the weekly fair value gap as a resistance area that I'm anticipating lower prices to run the sell side liquidity. And so far, since I talked about price trading lower, because it was the close of this candle, close of this weekly candle that I talked about anticipating lower prices to run the sell side liquidity, which currently you can see the price did a retracement, took out the swing high that I talked about, price not going above the swing high. Price took out the swing high, and last week price opened and stayed within the range of the previous candle, the previous week candle. The price have been in the range for over a week of this candle's range. And on the daily time frame, there's more details to what price is currently doing on the daily time frame, which I will get to the specific reasons why I personally used it as a good advantage for me to take a break off the chart. Price is still aligned with the idea of trading lower, which you can see still price haven't filled the weekly fair value gap, still within the range of the weekly fair value gap, and currently after run the high, price formed another swing high, which is the likelihood of price trading lower. So the bias is still aligned with the idea of anticipating lower prices to trade lower to run the sell side liquidity. On the daily time frame, looking at the daily time frame, after price took out the swing high on the weekly time frame, after price took out the swing high, you can see there's an internal shift on the daily time frame. If you guys have been paying attention, I told you guys that whenever the weekly and the daily is not aligned, telling me the same story or giving me the same direction to where price is trading to, I'm most likely not going to be looking for any setup during those times, which here is a good example. Price took out the swing high, did an internal daily shift, price did a retracement to a weekly inversion fair value gap. There's a likelihood of price using the inversion fair value gap to run the buy side liquidity. So I stick to the idea that if I were to take a weekly expansion trade, I need to see price fail the support from the daily inversion fair value gap. Fail to support from the daily inversion fair value gap, trade lower, fail to support from the other block, trade lower, if more possible to see a shift in structure in running out the swing low. The point is that on the daily time frame and on the weekly time frame, in most cases, the daily time frame will tell you the current trend and it will be more right than the weekly time frame. I try to pick a time frame between both that whenever the weekly is aligned and the daily is not aligned, I should stick to the daily or stick to the weekly. I found out that in most cases, price do consolidate before a quick reaction in aligning itself back to the trend of the weekly or of the daily. depending on which is on the right side of the chart. So I took the advantage of waiting, being patient to wait for that setup to align with the weekly buyers. And those are the times where you'll be tested in understanding patience and to learn how to be patient, to wait for those setups and to wait for those right time to take advantage of those trades. For price to align with the idea is to trade the inverted fair value gap should fade in holding price and price to run the swing low. Now, if you were to wait and if you are a weekly trend trader, you're trying to catch the weekly expansion. I can't call it swing trading because you're not holding trade more than 3 days or 4 days if we were to look at that. But if we were to call it swing trading, I wouldn't be taking advantage of any 1 hour trade setup because the weekly is not aligned with the daily. If I were to take advantage of any setup, it should be from a daily perspective using the daily, the 4 hour, the 15 minutes, and the 5 minutes to develop a trade idea to look for the immediate daily draw on liquidity. Now, for day traders, those are your key areas for you to focus on. The daily time frame, the 4 hour, the 1 hour, and the 15-minute time frame. And the 5 minute time frame and the 15 minutes can be used for an entry. The trend should be based off the 4 hour and the 1 hour. The daily is to know the draw on liquidity. So if you were to take advantage of the setup, or if you were to look at next week and you are trying to take a trade, you should be more focused on what is the daily draw on liquidity. Those are for day traders. But if you are taking the intraday weeks trade, which I've used lots of the trade for an example in this 2026 mentorship program, then you should wait for the alignment on the daily time frame and on the weekly time frame. I think I need to make that very clear. Day traders can take advantage of the daily draw on liquidity, which is the buy side liquidity. If you trade the London section and the New York section, you can still look for setup because you just need the daily to have a clear draw on liquidity and you want to see the lower time frame below the daily aligned with that idea. And those time frames should be the 4 hour and the 1 hour. You need to see the alignment in those time frames. And you can look for your entry on the 15 minutes, 5 minutes, and the 1 minute. As if you were to learn about time and price, you can take advantage of the 1 minute. But to put it pretty clear, if I were to take a weekly expansion trade, I will wait for price to align itself with the trend. But if I were to take advantage of daily buyers trading the London section, the New York section, or trading either of them, I will be using the daily draw on liquidity. Now, I don't know which is going to be right at the very moment in price running the buy side liquidity because if price were to run the buy side liquidity and fill in the weekly fair value gap, I most likely will be having a weekly bias of anticipating a run on the swing high. So this might be development in trade, not going below to run the sell side liquidity. So you can tell you just need to stick to your own trade plan, which for those that do trade daily bias, I've already explained the draw on liquidity, which is going to be the buy side liquidity. But if you're trading the same trade that I've been taking, which is the weekly trend expansion trades, you need to wait for that alignment because we're trying to take advantage of times where the weeks on a weekly basis that the weeks is ready to expand to withdraw on liquidity. And seeing that the daily is not aligned with that idea, it's best you wait for the alignment before taking any trade setup. And the alignment is pretty clear. A trade below swing low and a fair value gap should be a re-entry for you to anticipate lower prices to trade lower. Now, I will be giving a full update on what price we'll be doing next week on the Telegram channel and on the Telegram group. The Telegram group is where mostly we're going to discuss because I want to make the group more and more active, try to help traders a lot in answering personal questions and have that personal connection with every student on the 2026 mentorship program, which a student asked that if I were to put in lots of effort to teach traders it should be a paid mentorship program, but I told them that it's not actually a paid mentorship program, it's absolutely free because I'm trying to tell traders that you can learn trading the right way even without spending money on courses, which personally I've sold course and I'm trying to give out a free course, which is the 2026 mentorship program. The 2025 have been free, and I've made my course very free to you guys on the YouTube channel. I'm just trying my best to give out more knowledge to you guys. And when it comes to return or having a private course, because a lot of traders have been asking me if I have a private course, that this is just a free, but I do have a VIP course that they can pay to be a member. I've told you guys that the private course is the main course. I don't have a private course attached to any course. I don't have private lectures. This is the main course and it's absolutely free. Now, the reason of me doing this is a personal reason, but it's absolutely free. If you want to take advantage of the setups or you want to take advantage of the 2026 mentorship program, you need to be involved in the Telegram channel, in the Telegram group, and on the YouTube channel. I will be using those three platforms in teaching you guys in my own burst of knowledge. On the 1 hour time frame, from last week opening price, you can see the consolidation after the retracement to the daily inversion fair value gap. You can see how price was consolidating. Now, the first retracement on Monday to the daily inversion fair value gap led to, I can say, a solid trend. But after price got to this high, you can see there was a back and forth in price, and price have been in the range of the swing high and the swing low. So for day traders, it's more likely in price going for the buy side liquidity. More likely in price around the buy side liquidity. But for weekly expansion traders, for those that are look for those weekly expansion trades, you will be waiting for price to run the swing low, and that fair value gap should be a great entry level for you to go into lower time frame to look for your setups. So for the meantime, you need to wait for those clear perspective in price. Looking at this 1 hour, you don't want to be involved trying to trade one side without a clear higher time frame perspective. If not, you will get wearied out by your stop because in terms like this, price will run both side liquidity before an expansion. So if you're looking for higher prices, you want to see a good run on the sell side liquidity and a good shift in structure before actually looking for any setup to run the buy side liquidity. But if you were to wait for price to align with the weekly perspective, then you need to see a run on the swing low. On the weekly time frame on Euro USD, you can see the inverse correlation between the currency. If you were to look at correlation more correctly, you know that I was anticipating higher prices to run the buy side liquidity. And seeing this up close candle forming a swing low gave me a good perspective in anticipating higher prices to run the buy side liquidity. Now, price took out the swing low prior to 2 weeks price action. Price took out the swing low, and currently I'm still with the idea of anticipating higher prices. I just want to see the lower time frame correlation to the idea. That should be the daily time frame. Now, on the daily time frame, after price took out the swing low, currently I'm looking at price, looking at this inversion daily fair value. Yeah. I want to look at how price is trading around the daily inversion fair value gap. If there's an expansion running out this high and there's a fair value gap for a retracement, that makes it a continuation in running the buy side liquidity, which the first strong liquidity should be this high. And anything apart from that implies trading lower should be a correlation from the dollar index. For day traders, pay attention to price trading lower from the inversion daily fair value gap. Now, the reason I'm giving out both perspective in this price action is that I'm trying to tell you guys that I'm not actually looking for any setup on a weekly expansion trade because price is not aligned with the weekly perspective. As long as price is not aligned with the weekly perspective, I'm not looking for any setup. But once there's an alignment in price, I will be anticipating higher prices. And my drawn liquidity should be this high. On the weekly time frame on GBP USD, still had the same trade idea and anticipating higher prices to run the buy side liquidity, which you can see price traded lower, took out the swing low, and retraced to a weekly order block, which the drawn liquidity I'm currently looking at is price trading higher to run the buy side liquidity because it's well aligned with the idea of the correlation and of the technical bias on the weekly time frame. On the daily time frame, I want to see a shift in structure on the daily time frame before actually looking for any setup. But if you were a day trader, you can anticipate low prices because you can see how price is resistant from the mid-range of the weekly fair value gap. And at the same time, price is aligned with the idea of the swing high, swing low. Price is currently at the mid-range and respected the mid-range, traded lower, draw on liquidity. And in some way, it's correlated to the dollar index on a daily time frame perspective, but I wouldn't get into much of it. I've already explained on how you can trade the daily time frame when the weekly is not aligned with it. I talked about it on the dollar index. But the idea is still the same. I'm anticipating higher prices on the weekly perspective in price running out is high, but I need to see a daily alignment in price before actually looking for any setup in price trading higher. On the 1 hour time frame, now I was looking at this setup, but I didn't take advantage of it. I was looking at this setup from the mid range of the weekly fair value gap, using it as an inversion fair value gap, and at the same time align with the daily perspective of trading lower. Looking at the setup in price, running out the swing low, shift in structure, retracement. Here's another block. Respected the other block, traded lower, but the price did not run the drawn liquidity. Now, I didn't take advantage of the setup. This is just something I noticed, and I want you guys to have that same idea in understanding price, doing those back testing, looking at price when price is delivering on a buy side or on a sell side delivery. And look at it on if you were to anticipate price to trade to that direction, how you would have taken advantage of those setups. Now, on USD JPY on the weekly time frame, on the weekly time frame, price respected the weekly fair value gap, traded lower, came close to the sell side liquidity, which I told you guys I was anticipating a run on the sell side liquidity, which price did not run the sell side liquidity, did a retracement 2 weeks back. Back to the weekly fair value gap at the same time, back to the weekly order block. Here's the weekly order block. From this order block, here's the other block. If price were to trade lower, it should be price respecting the other block and trading lower. But looking at it from a daily perspective, clearly you can see there is an internal shift. And you can see how last week respected the internal shift. Here's a daily fair value gap, respected the daily fair value gap, swing high. Here's a new swing high. So if I were to anticipate lower prices or to wait for price to align with the weekly idea. And you just see price fail in trading higher, trade below the daily fair value gap, trade below the daily fair value gap, and fail to support from the daily order block, and the drawn liquidity should be price running out the sell side liquidity. So I told you guys my thought process going in this week and what I'm currently looking at from a weekly perspective. Now, on the daily perspective, we will be having a lecture, which we talked about on the Telegram group. So make sure you're in the group and you are a member of the group so that when I tell you guys the next time I will be having a lesson, you already know what I'll be talking about in that lesson to see if that interests you in watching it live. Which I'll be having the lesson live, and you can ask me any question directly. You can just ask the question from the Telegram group, and I will be answering it when I'm having the live talking about my daily perspective in price. But that is it for this lecture. See you guys in the next lecture.